Ladies and gentlemen, welcome back to another video. I'm your host, the Dividend Aristocrat, and today we're going to be talking about all my dividend income for the month of March. Now, if you guys do enjoy this type of content and you haven't already, consider subscribing to the channel. I'm on my way to 2K and it would help me out a lot. As a reminder, this is not financial advice and I'm just merely sharing my opinions on this channel. Now, it has been a pretty rocky start to the year so far, especially towards the end of March and beginning of April. Stocks have been down a lot. As you can see, my portfolio is currently down 5.17% on the day, which is crazy. Now, just to give you a bit of context, for my portfolio specifically, it's very rare that it will go up or down anything over 1.5%, maybe 2%. So this is very significant in terms of drawdowns, and we'll see how far this will go. Now, because of the recent dip in the market, I have actually been taking advantage of this opportunity. And as you can see right here, my cash position is currently at $9,637, which is down pretty significantly. I think it was about $13,000 just a week ago. Now, for now, I have not bought any new companies, but I have been investing into companies that I already have in my portfolio. And if you guys are interested in seeing a full breakdown on what I've been buying recently, stay tuned for next Sunday. I'll be covering all the buys that I've been doing over the past month, maybe month and a half. Also, if you guys do want to see some quicker updates, check out my Patreon. I'll leave the link down below in the comment section and you can join me there for free. When I have the time, I try to put some posts out there covering my recent buys, so it's a good place to stay up to date. Now, I currently have 22 different holdings, and you can see right here my total invested is at $46,865, and that's up a lot from January, the beginning of the year. I've already invested $11,894 in 2025, and a lot of that's just money that I rolled over from 2024 that I did not invest. As a reminder, my goal for the year is to invest $12,000 for the year or $1,000 per month on average. So of course, we're definitely going to be hitting it this year. I was pretty disappointed in myself last year when I did not hit that goal. Now, if you guys want to see a full breakdown of my investing strategy for this year, 2025, I'll pin that video right up here so you guys can check it out after you're done with this one. Now, my current portfolio value is at $53,048. My unrealized gain is at $6,183, which gives me a total return of 13.19%, and that's down pretty significantly from the past couple months. Now, there's a couple reasons for that. Of course, we have seen a pretty big downturn in the market, but also as I invest more money into stocks and I raise my cost basis in those holdings, my total return is going to come down, of course. Now, I've earned $1,635 worth of dividend income, and all that has been reinvested back into the companies that paid it out, and going forward, my yearly projected income is $911.10, and my goal for this year is to break that $1,000 a year of yearly projected income, and we're getting very close to doing that. Now, I have both dividend and non-dividend paying stocks in my portfolio with a preference towards dividend growth stocks, that is stocks that grow their dividend each year. And as you can see right here, my portfolio yield currently sits at 1.72% and my yield on cost sits at 1.94%. Now, I prefer it on the lower end because my main focus is total return, but I think dividend growth stocks will be a great way to have good performance in the market in the long run. Now, in terms of dividend received, which we're going to be talking about today in more detail, I've received already $216.84 this year, and we only finished 3 months, and that already puts me ahead of 2022, and we're catching up to 2023, and of course soon we'll surpass 2024. Now, if the title didn't already give it away, this month was a big one for me, and it's the record amount of dividend income that I've ever received in my portfolio in 1 month, so that's pretty exciting. Now, in terms of which companies pay me the most amount of dividends, as you can see right here, schd finally is slightly beating out VOO by just a little bit. And then we have Altria Group, ticker symbol MO. We also have Target as a big one, Texas Instruments, and Booz Allen Hamilton. So without further delay, here's all my dividend income for the month of March, and as you can see, it is pretty hefty. So starting off the month, we had Target at $7.04, and I've actually been buying more Target shares recently. They've been on a pretty significant dip, down to about $90 to $95 per share this past week. Now, in this column right here, you can see the quantity, and all that is referencing is that reinvestment of the $7.04 was enough to buy me 0.056 more shares of Target. So in the same way, we can see that Visa paid me $179, and that was reinvested to get back 0.05 shares of Visa, and that's because I have a very small position in Visa and it pays a very low dividend. Then we had Booz Allen Hamilton at $17.07, we had 3M at 81 cents, S&P Global at 486, Microsoft at 338, Google at 3.01, United Health at 1066, and Northrop Grumman at 211. Then towards the end of the month, I got a dividend from Home Depot at 482, and then my two really big dividends came from schd and VOO. These are the two ETFs that I own in my portfolio, and they make up some of the largest positions within my portfolio. So I have both a fairly big allocation set to schd, and also it has a pretty large dividend yield right now. So I got paid $51.51 for schd, so that was 1.87 shares reinvested back in, and funnily enough, VOO paid me $56 0.56, and that was reinvested to get back 0.112 shares of VOO. Now, I believe these are both the largest dividends I ever received for each of them. So I think 51.51 is the largest for schd, and 56.56 is the largest I received for VOO so far. Now, I think the next 2 quarters will be lower, but usually towards the end of the year, December, there's a good chance that at least one of these will be higher than this dividend right now. And taking a quick look at the MyPie section of my portfolio, the reason I like to show you guys this section is because it helps me stay organized with my investments. So as you can see right here, I have 3 different strategies: key to success, divine dividends, and miscellaneous is what I call it right now. And my target allocation for each of them is listed right here. So 50% for key to success, 40% for divine dividends, and miscellaneous is at 10%. And that's what this pie right here shows as well. Now, next to it, you guys can see I've not done a great job allocating my portfolio. And that's why I have this whole section here, is to help keep me organized. And you can see that I need to add more money into my key to success section to help outweigh it. Now, also right here, you can see my cash position relative to my stock position. So 15.4% of my portfolio basically is in cash, and 84.6% is in stocks, but you would have to add these 2 numbers to get the total value of my portfolio. So it'd be closer to 62,000 right now. Though I do want to clarify that for the sake of these videos, I only consider stocks as the part of my portfolio that I list. I don't consider the cash sitting in the portfolio as part of that value as well. So clicking the slices button, we can see exactly what this is composed of. So the key to success section is my ETFs, that's VOO and SCHD. And my goal is a 75-25 split, but I've been going a little bit heavier into SCHD because I believe that once we go into another growth phase, VOO will of course outweigh SCHD again in this section. Next, we have the divine dividend section, and this is just blue chip companies that pay a growing dividend. So companies like Texas Instruments, Microsoft, S&P Global, and Target. Now, I recently added Google into this pie, but we'll have to see if they're going to be paying a growing dividend or just a consistent dividend. I assume they're going to be growing it because both Meta and Salesforce decided to grow their dividend this year, and that should be announced pretty soon. So as you can see right here, Google is really overweight right now at 9.1% of my total portfolio value. I don't want to chop any of my Google position, but what I hope to do over the next couple months or even couple years is to add to different positions in order to help reallocate the portfolio. I prefer to fix my allocations by buying more into certain positions rather than selling certain positions and then moving that money elsewhere. Then in my miscellaneous section, we have stocks that are either risky or have cut their dividend, for example 3M and Intel Corporation, and then also companies that don't pay a dividend. So we have Amazon, Tesla, PayPal, and Uber. Now, if you guys want to see any specific stock spotlight videos about any of these stocks right here, definitely let me know in the comments down below and I'll be happy to get to it when I have the chance. Also, one thing I want to clarify is stocks in red are on the chopping block. They're probably going to get sold at some point, and stocks in yellow are kind of under consideration for whether I'm going to keep them or not. And real quick, I went to my portfolio holdings section and organized all the companies that paid me a dividend this month, from the highest payers each year to the lowest payers each year. So you can see right here that SCHD has recently taken over the #1 spot over VOO. Now, sliding to the right, you'll see exactly what I'm talking about. So if you look right here, we have the dividend earned so far. So of course, VOO is still in the lead, but then going forward, the annual payout is how much they're going to be paying me each year going forward. So $216 per year from SCHD and $212 per year from VOO. Now, I have been investing weekly into both SCHD and VOO since the year started, so by the end of the year, it should be much higher than it is right now, assuming no big dividend cuts for any of their holdings. So then we have Target at $73, Booz Allen Hamilton at $65, United Health at $42, Google at $26, Home Depot at $18, S&P Global $18, Microsoft at $13, and Visa coming in at $7, with 3M coming in last at $3.11. Now, for both Visa and 3M, they're just such small positions, which is why their dividends are so low. Hopping into my dividend calendar, which is one of my favorite sheets within the spreadsheet, it helps really visualize which companies are paying me dividends, when they're paying dividend, and how it's growing over time. So since we've only started the year and I don't have any companies that are paying monthly dividend income in this portfolio, we can't see yet how they're growing throughout the year, but we can see right here is how much they paid me this year so far. So looking at the column for March, we can see that I earned $163.62 in March, and for the year we've earned $216.84. Now in this column right here, labeled totals, you can see how much each company has paid me in the year so far. So SCHD has paid me $51.51. As companies announce dividend increases, and as I invest more into these companies, both with dividend reinvestments and just new capital, you'll see that each quarter the amount of the dividend should grow pretty substantially. Moving into the monthly breakdown section of my portfolio, it shows me how much I invested and how much dividends I received each year since I first started investing. So you can see right here that my first bit of investment was $2,800, and it was just a lump sum investment into VOO in October of 2020. That same year, I received my first dividend at $12.45, and that was from VOO. Now scrolling down, we can fast forward to 2025 and you can see how fast it's grown. So right now I invested $3,332 in March, and April has just started and I already invested $3,496. Now I am well aware that the market could continue dipping and the stock prices continue going lower, and I'm fully prepared for that. I still have cash on the side, as you guys saw my portfolio dashboard, and as it continues to dip down, I'll continue dollar cost average into the stock market. It's very difficult to perfectly time the bottom of any company, let alone an entire market, and so the last thing I want to do is just wait on the sidelines until it's too late and the market does a V-shaped recovery. Now, of course, if the market does stay depressed for months or even years, then I'll have more time to invest into those companies and lower my cost basis over time. So highlighted in green, I have conditional formatting showing me the largest amount of dividends I've ever received in a single month, and that's this month at $160.62. Now, this graph right here just shows my monthly dividend income over time, and although it is sporadic because of my ETF investments, you can see that overall it is trending upwards pretty quickly. Now, for those of you that have made it this far into the video, I do like to go through my future value calculator to project how much my portfolio could be worth at a certain time in the future. And so as you can see right here, my starting principal is my current portfolio value, and my annual contribution is how much I'm expecting to be contributing each year into the portfolio. The annual dividend yield is my current dividend yield for the portfolio, and the expected dividend increase and price appreciation can be set to whatever I want them to be. So I think for dividend increase, we can comfortably set it to 6% dividend increase over time, and the expected price appreciation might be a little bit lower than that. Maybe we can say towards 8%. Now right here it says for 40 years, but it's not really realistic, so let's click the drop down menu and see how much it might be worth at the end of 20 years. So at this rate, the portfolio will be worth about $860,000, and the dividend income each year will be about $8,975. Now there are a ton of factors that can affect how much this portfolio will be worth. If we change price appreciation back up 10% more, then be worth $1 million, and if we went to 30 years, you can see how substantially it grows at that point. If you guys do want to try this future value calculator for yourself and play around with all these values, I'm going to leave the link for my Patreon down in the description below, and you can grab this future value calculator and download it for yourself for free. Now I think an important thing to consider also is that the price appreciation is not in your control, but what is in your control is how much you can contribute each year. So if hypothetically I was able to put in $30,000 per year, which is much more than I'd be able to consistently do, then you can see still how large a portfolio can grow, because the amount of capital you put in is very important when it comes to your future value. As always, that does bring us to the end of today's video. I really hope you guys enjoyed taking a look at my portfolio and how much dividends I received in the month of March. Now, if you did manage to make it all the way to the end of the video, just comment down below how much dividend income you received in March and which companies paid you out. Also, if you haven't yet watched my latest upload, which talked about which companies I'm planning on buying with the tariff news, check out this video right here. And if you want to see the video before that, where I did a stock analysis on General Dynamics Corporation, check out this video right here. Remember, the best time to invest was 10 years ago. The second best time is today. I want to thank every single one of you guys for watching, and I will see you in the next one.